Hello and welcome to Commodity Champions. I'm Manisha Gupta with your weekly roundup from the commodity space. And what a week it has been for this sector. Despite favorable fundamentals, the metals were pulled down thanks to the tariff war by the US. It all started with US imposing tariffs on steel and aluminum. The Trump administration imposed 25% tariff on steel imports and 10% tariff on aluminum imports. This unsettled the major exporters like China, Japan and South Korea, while their industry called for a retaliation. It was detrimental for the metal prices as steel prices went down by 7% this week, while aluminum is down 2%. The country that produces half the world's steel, China, said that they will assess the damage caused by the move and will firmly defend their legitimate rights and interests. However, the NAFTA countries were helped by the exemptions granted to them. So how will this impact the metals going further? Will the uncertainty continue? To answer these questions, we have with us Jonathan Bharat, economist and CIO of Ayers Alliance. We also are joined by David Lennox, who's resource analyst at Fat Profits. Gentlemen, hi, thank you so much for joining us. Jonathan, coming to you first. Quite a week that it has been. The US finally has pressed ahead for the import tariff of 25% on steel, 10% of aluminum, and that clearly has seen a lot of bristling coming in from the other countries. How do you see the metals now taking it in?
Nisha, quite interesting. I think obviously we're seeing a lot of the metal markets under pressure, there's no doubt about it. The question is whether or not that's tariff induced or whether or not it's just a function of supply and demand. We've had a good long period of bullish prices, and now we're seeing a correction, and a correction with some good solid Chinese data behind it that suggests prices will go lower. So I think, if anything, on the tariffs, still need more time to assess what's actually occurring, but I think some of the commodities are actually trading by their own.
Jonathan, we already have seen a knee-jerk reaction on the metal space in this week with the kind of dip that we are seeing in the sector. Do you see anything worth buying right now, or would you rather stay on the sidelines?
I think we have to really sit on the sideline a little bit. I think we've always talked about being positive 2018 for a lot of the metals. I think when I do come back and look at the tariffs quickly, I always get a sense that, there are winners and losers, and it's just that the losers will always go and try and find another market if they get upset. So when I look at where the metals markets are trading, particularly obviously the base metals, and we're under pressure, I'm viewing this little correction as something that could go a little bit deeper. But at the end of the day, we're still optimistic that the global growth, which we predicted at the beginning of the year, will actually maintain. And then all those inventories which we're starting to see, remember we are seeing a lot of building inventories at the moment, that will dissipate and we'll find a good low from which to buy from.
Well, that is what the markets also are, anticipating for, Jonathan. But David, getting you in the conversation as well, while the whole US import tariff thing is almost done now, how have you read it and where are we headed from here? And how will that impact the global trade from here on?
Oh, good morning, Manisha. Certainly, if you have a look at the rhetoric that's now coming out of the US, it would in fact suggest that we've still got a long way to go before we get all this sorted out. Yes, there are now exemptions available to various countries that perhaps yesterday weren't. So that puts uncertainty almost straight back out to play. Overall, we do think that countries will certainly be retaliating if they find themselves on the 25% steel tariff list and also the 10% aluminium list. There's no doubt about that. The rhetoric that we've heard from those countries is certainly leaning that way. But now, of course, it's been softened with the ability for countries to apply for exemptions. So really, we're back at square one. The uncertainty is going to remain until such time as we just know where those numbers and those countries that are going to be impacted are actually aired.
So, David, while you did see that there are concerns about the global trade war right now, would you say that the initial impact now is into the prices, and we perhaps, as Jonathan also mentioned, that going forward we will start seeing the basic demand fundamentals and supply start coming back into the prices, or would you also say that we are still some time away from all of that?
Look, it's certainly going to be a fairly long, drawn-out affair, because we do have to just see what countries do get put onto the list. We have to see those countries that are exempted. And of course, even the tariff amounts may now come into question. Some countries may not face 25% or somewhat less. But one would have to suggest overall, if we do see an out-and-out trade war between some of the major trading blocs, such as the US and the Euro, then we would expect to see commodity prices, unfortunately, in that environment, starting to suffer as concerns over demand does start to wane. However, having said that, it then will come down to perhaps whether or not the US is on the winning side or the European Union is on the winning side, and then what their currencies are doing. If the US dollar starts to fall, that's going to be a constant tailwind for the commodities, and that could push them higher. But of course, if the euro starts winning and we see the dollar starting to rise, if we see the Americans winning and the dollar starts to rise, that's going to cause problems for commodities. So look, overall, Manisha, we really still are in somewhat of a fuddle as to where all of this may head the commodity prices.
All right, so both of you really are saying that this is just the beginning and we perhaps are looking at more pain to still come in for this space. But Jonathan, where do you see a more stronger micro fundamentals, because we are looking at a strong demand quarter for metals coming in as we get into April. The Chinese imports have not been so positive, but exports definitely have been good. And then there is this whole EV demand story, the strong global synchronized demand. Do you see all of those stories still stand, and where do you see the metal prices then taking support?
Well, I think when we've seen this rally in the metal market, we've always seen an influx of inventories. Where the inventories, whether it's copper, whether it's nickel, zinc, or whether it's iron ore, we've seen this massive build-up. In fact, as you know, with iron ore, we're at record levels as we speak. Obviously in China. So I guess at the end of the day, we're saying, well, with these inventories levels, how quickly can they actually draw down? And given the economics which we're actually seeing, how fast, and then will momentum start to pick up? When I do look at the metal markets, I've always liked copper, but we are seeing inventory builds there. And I think if anything here, this is more of a corrective trading regime that we've got at the moment, and then we will find a low. Remember, we're still in a contango, still positive. So I think when the dust settles, when this tariff situation gets out of the way and we know where we are, if there are no retaliations, then we don't have an issue with global growth, then I still like copper, obviously quarter one, quarter two starting to find that low and then starting to pick up.
All right, so copper is a favorite emerging there and the fundamentals are still strong. But David, what is your sense now? Are you also looking at a stronger bullish fundamental picture going forward from here? And how far do you see it? I mean, like a month, 2 months before we start getting back into the strong fundamentals yet again?
Certainly, yes, you're right there. We are now seeing that synchronized growth around the globe. It's something that we haven't seen for some time. And that's really brought the commodity prices into focus, and we've seen the prices adjusting to that very factor. The trade war or the tariffs, that's put an uncertainty into the market that we didn't have just a couple of weeks ago, and that is in fact now starting to just overlay somewhat on that synchronized growth. Of course, if we do see an out-and-out trade war, we're not sure whom is going to be involved apart from the Americans we know are going to be on one side, and just the impact that war may have in terms of growth within those countries that are going to be put onto the tariff list. So again, it's really going to be a matter of watch and see. But one would suspect, given the history that we've seen when trade wars have occurred before, that unfortunately there's just going to be no losers. We will see global growth probably decouple as those countries start to suffer, and that's going to cause pressure for commodities. But overall, that could take some months to play out, and we'll be watching as obviously that does start to move through.
Well, that doesn't really sound so good, David, when you say that we could be looking at decoupling of the synchronized global growth. That would really mean some more pain coming in for many of these asset classes. But Jonathan, while the US import, of course, has been one issue, there also is the ECB now signaling a gradual policy normalization, and that seems to be weighing on the metals as well. So on one hand, you have North Korea president pledging to refrain from further nuclear missile tests. So there really are various things moving in the global markets. What are you latching on to right now?
When I look at what's happening with ECB in terms of their normalising, that's something we've seen for some time, particularly in the States. When I see what Trump's doing with Kim, I think they're a little bit odd with that, because that's suggesting that Kim is more of a focus than anyone else to Donald Trump. So I guess there's a little bit more volatility, but if it sort of reduces that global fear, then we'll see, obviously, that geopolitical risks start to dissipate for the precious metals. But at the end of the day, I'm still focused on price pressures, given we've had interest rates low for such a long time. And I see that inflationary, or that price cycle, starting to build back in. And as a result of that, when I look at gold, I should think that we're getting at a lower end for gold, to which I think I'd still like to buy. We're currently long the metal, and we're looking at those dips to buy some more.
All right, that's a view coming in from both our guests, that there is some more pain coming in here. The fundamentals are strong, but there is uncertainty on how longer can the U.S. tariff impact play on to the markets, countries and the metal prices as well. But gentlemen, stay on with us as we go for a short break. When we come back, we will discuss about the crude, precious metals and currencies as well for the next week.